Hi, Michael here. Welcome. March 16, 3:30 p.m. Brussels time. European markets have been open all day already and quite positive after the slaughter that has been going on over the past days, both in the US and in Europe. US markets have opened about 2 minutes ago, but we've already got some prices in from the pre-market trading. I was right about a month ago that when I said that the first quarter would be a bit lame in terms of being able to transact. What I did not predict is that not only it didn't get better, but that it would get worse with the collapse of Silicon Valley Bank last Friday and sneakily over the weekend. And then early this week, the great news that Credit Suisse was almost crashing. Two completely unrelated events, but unfortunately in the same sector, the financial sector. So that makes everybody itchy and nervous. The great thing, obviously, of having 2 or 3 days in a row where markets are going down with between 5 and 10% is that there's always bargains to be found. And that's exactly what I've been doing all day today for you. We'll be adding 5 shares to the watch list that have great potential. Let's first have a look at what's going on our dashboard and in the watch list. The sweet spot has been very volatile over the past days. Today, there's only one that was there also yesterday. Baidu with a spread that has a bit increased, obviously, because prices have been going down. But all the other ones are fresh and new, and that has been like that over the past days. I've been working quite hard to keep the file up to date, and I've added here even now an explicit percentage of how many records are up to date. And up to date, I mean with a refresh date of either today or yesterday. And I always went a bit with my gut feeling, thinking that this looks quite up to date. But then if you look at the numbers, it is still only 60.4%. So we need to do some additional work there. Still seven shares in the sweet spot as we speak, with spreads ranging from between 10 up to 16.20%. And I remind you what in my definition the sweet spot is. It's those shares that have a difference between the current price and the first resistance of at least 10%. We've been seeing really crazy spreads here over the past days. I think it was a chart that at some point had a spread of 105%, which is of course completely not realistic and ridiculous. Um, so yeah, everything's going down. My personal portfolio is at this moment down, I think, with about 12%. So there's obviously no budget to buy. I was close over the past weeks. There were 2 shares creeping up to the limit where I was willing to sell. But then, of course, our friends in Silicon Valley and in Switzerland decided to sabotage that. So we'll just have to wait a little bit longer, which means that in the end of the day, the percentage return over 2023 will be lower than it could have been, and that is just life. Now, let's have a look at the 5 shares that I have identified this morning. All 5 shares with nice potential. Some of them even with a short-term potential, which means that if you keep an eye on them, you'd even be able to make some money on the very short term. First one is Wing, which is, if I remember well, a um, recreation company, games, what have you not, I think. Let me see why it doesn't. Yeah, there we go. We fetched the data. Current price is at 174.66. While we have, let me have a look at the other screen here, a first resistance of 176.09. which gives us with a very small spread, but as we've seen, very strong upward potential over the past days. There is a scenario where obviously the share is going to break this first resistance and continue to grow, and then obviously we'll be seeing a larger spread because the first resistance will increase as well. That is all fairy tales until it happens. But I'm just painting scenarios here. The second one that we've identified is workday. I'm again working here on the Office Online version, and I'm not sure why it makes life so difficult to just do what it's supposed to do. But patience is a virtue, right? So there we have it. Workday, current price of 184, and the first resistance that I've calculated is 193.64. I actually started teaching myself how to calculate these first resistances myself, because what I get from my brokerage account is often ridiculous, and that's why I decided to teach it myself, and it's not overly complicated, so give it a try. Third one is Cube, which has a first resistance of 48.40 at the moment, and I should not be typing that in this field obviously, but right here. Which gives us, just like the previous one on Workday, a spread of around 5%, far from the sweet spot, but still impressive enough to keep an eye on. The runner-up is CSWI, with a first resistance of 138.27, and again a spread of around 5% here. These are all shares that have very strong short-term potentials, and are all quite close to their first resistance. So let's again, the preferred scenario here is that we see them breaking that first resistance and then have a rally towards a next resistance level, which is more attractive. HCI doesn't seem to want to be a share, so let's try that again. And then we have there a first resistance of 59.79, and obviously a rating of accumulate, because that's what we're looking for. We're looking for shares with a rating of accumulate or buy, and with a spread of more than 10%, which HCI almost has. It's still 9%, which means it's an attractive share, but it's not yet in the sweet spot. Let's have a look if that changed anything to the dashboard. I don't think so. For the record, let's have a look how many shares we have now, 644. Tomorrow's update will actually be about lowering this number. I need to think about what it is, but in particularly the very cheap shares, I'm eager to take them out, because I'll never buy, for instance, shares that have a price under 5 USD anyway. So why should I be spending my time here on keeping that all up to date? I've got other things to do. Having said that, this brings me to the end of this update in a very unpleasant and volatile period. Obviously, in the end, things are never as bad as they are, because Swiss state will just borrow Credit Suisse 50 plus billion dollars, and then they'll stay alive even without this loan. The bank intrinsically is not unhealthy, except for the fact that they've been doing some unhealthy practices over the past years, which the auditors only recently found out and decided to bring that out in the open. Please subscribe to the channel. Actually, it doesn't matter if you watch the videos or not. If you just subscribe, that is already a great thing. It's still a very young channel, 14 subscribers only, and as I've said before, my ambition, despite the fact that I don't know what I'm doing, is to have 1 million subscribers. So there's still a way to go. Thank you very much for those who were here today and watched the video. It's very much appreciated. And we'll be back tomorrow. Thank you.